Good morning, everyone. This is Steve Lentz with the Morning Market Huddle. Today is July 10th, and this is brought to you by Discover Options at www.discoveroptions.com. Presented material today is for educational purposes only and should not be construed as personalized financial advice. Options trading involves substantial risk that you should be aware of before you embark on an option trading endeavor. Folks, I want to welcome you. I'm looking very much forward to this. We're going to spend about 10 minutes here going over a few things about this show. Initially here, we're going to talk about our general philosophy of trading, our general philosophy of how you, an options trader, could learn to become an expert at doing this. And we take a 4-step process. First, you got to learn about options trading. A lot of options traders go to seminars. You'll pay thousands of dollars to sit in a chair for 2 days, and you get information overload, and then you go straight out and you trade big lot positions in the markets, and that is not the way to do this. Not the way to do this. How does a football team get prepared to take on Monday Night Football? First, they have a chalk talk with their coach in a classroom sitting in the chair. That's fine. Then they go out on the field and they practice first. They practice running drills, they learn their plays, and they practice kind of in the privacy of their own practice facility. All right, and likewise, you as a trader, you cannot go to a 2-day seminar, plunk thousands of dollars down, sit there, and then immediately start trading large lot positions. You don't go from the chalk talk to Monday Night Football. First, you got to hit the practice field. You got to hit the practice field hard and practice options trading with historical option prices, practicing and doing drills and practicing your strategies. Okay? Then what happens? What does a football team do after the practice phase? Well, then they start scrimmaging against each other, maybe inter-squad scrimmages perhaps. Maybe they'll get together with another NFL football team. If you watch the NFL football channel, you'll see that maybe the 49ers and the Broncos might get together somewhere and they'll do 7-on-7 drills, and then they'll go to 9-on-9, and then they'll go to 11-on-11. And likewise, you as a trader have to first practice and then scrimmage in the markets. How do you scrimmage in the options markets? How do you scrimmage? Well, you trade 1 and 2 lot positions. Okay, you don't risk a whole lot. All right, you practice first, then you scrimmage with 1 and 2 lot positions and prove to yourself that you can make money doing this. Don't just jump straight to large lot positions. Start small, get good at it, and then you start ramping it up, getting ready for Monday Night Football, okay? This is the way of the gridiron, and it works. At discoveroptions.com, we have a great personal mentoring program that takes you through this process to help you become an expert options trader. All right, what's in your playbook? You've heard that term in the commercials. What's in your wallet? Okay, well, what's in your playbook? All right? In the world of football, now I'm a youth football coach. It's a passionate hobby of mine, and I like to apply some of the same things I learned on the football field to you as a trader learning to become an expert here. And there's a lot of similarities. And so every trader, whether you know it or not, you have a playbook of trades that you're running. You have a playbook that you do run. Now, you may not be aware of it. Maybe your playbook is really, really thin, just a couple pages, but that's okay. We're going to talk more in the ensuing weeks about your playbook. We're going to get together every Tuesday and Thursday morning like this, and we're going to post this. If you want to get the full 30-minute version of this program, go to discoveroptions.com and register to receive our newsletter, and you'll be put on our email list, and you'll be able to see our daily, our Tuesdays and Thursdays broadcast of this, all right? What's in your playbook? Well, here's a long stock position. Here is a picture of a long stock position, okay? And it's important in the world of options trading that you understand how to read these graphic analysis positions. All right? How do you read these charts? So let's just take this kind of slow here. All right, I'm going to take a little ballpoint pen. And we see on the x-axis the price of Apple stock. The price of Apple stock. If Apple goes up, we move to the right, going all the way up to 250 here or so. If Apple goes down in price, we move along the bottom axis all the way down below 100. All right, now that's how we read left to right. Now, how do we read the y-axis on the left here? Okay, what we do is we come up here and you can see the zero break-even line. Anything above this line is your dollar amount of your profit. Anything below this line is the dollar amount of your loss. So reading this, if you were to purchase 100 shares of Apple stock, 100 shares of Apple stock, all right, and if Apple goes up in price and we move to the right, you could see that you're now going to make money. Okay, if it goes up past 190 here, you're going to make over $2,000, well, upwards of $2,000 plus. All right, if Apple goes down to say 142.27, if it goes down, over 30 points, how much would you lose? Well, you're going to lose, over $3,000 there. So that's how you read these charts, and it's important that in the world of options trading, to learn what your risk is, that you know how to read these. Now, we intuitively know. We don't need, if we're just buying stock, we don't need to look at this chart, right? We have an intuitive feel for this. It's no big deal. But now let's look at a particular options play. Here's a play that might be in your options playbook. It's called a long option position. And in the Apple stock, we have a 175 strike. All right. And as of yesterday, July 9th at the close, it was trading for roughly $5.25. $5.25 per share. Now, how many shares does an options contract control? All right, it controls 100 shares. So if you were to buy this option, how much money would you put out of your pocket and how much money can you lose? This is the beauty of options. Your risk is limited on these calls here. Your risk is limited to $525, okay? But your potential gain is unlimited, and we can see the picture on the right. What this picture looks like. The red solid line is what this would look like in 10 days. The most you could lose, you could see, is $525. Yet, if Apple goes up and we move to the right here, you could see that your gain can go into the thousands of dollars if Apple keeps going up over the course of 10 days. Now, you'll have to ask yourself, how likely is that to happen? And that's a great question, and that's why we show you today's line, which is the dotted line. The dashed line is roughly 5 days from now, okay? And then the solid line is as of expiration 10 days in the future. So if today Apple went up to, say, 181.27, okay, right here, okay, how much could you make today? Well, you could make, it looks like roughly about $400 and change right there. If that happened today. If it happened 5 days from now, you'd make around $250. So that's how you read these charts. This might be an options play in your playbook. What's the break even on this thing? Well, you take the stock price, the strike price itself, 175, plus the cost of the option, 180.25 is your break even at expiration right there. Okay, so that's one little page that might find its way in your playbook. Folks, we are DiscoverOptions.com. We have a great mentoring program. Thanks for joining me today. Look for us again on Tuesday next week and also on Thursday. Take care.